Focus on Munis today is brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. All right, let's talk municipal bonds. Why not? Because it's Friday. Shruti Singh joins us, municipal finance reporter for Bloomberg News. She's based in our Chicago, Illinois bureau. We appreciate getting a few minutes of her time. Shruti, thanks so much for joining us here. How have the municipal bond market, how is it performing year to date?
This week's been volatile. They've had a rough week because for a while, munis weren't reacting to all the volatility that other markets were seeing. But this week, we saw that munis lost a bit. Yields rose, and we saw the indexes post some losses because of the volatility. It finally hit the muni market, which is usually known as kind of a staid market.
How are valuations in the municipal bond market? I guess you look at it relative to treasuries. How is the valuation call right here?
Yeah, so the relative value of munis to treasuries is a key marker in the muni market. So often munis will follow or track treasuries movement up or down. And this week, what we saw is that relative valuations from munis relative to treasuries actually eroded. So a lot of times investors will look at munis in terms of what their yield is compared to what treasuries are. And so this week, for example, munis actually, the 30-year muni actually became 90+% of treasuries in terms of yields. And that's actually seen as better relative value from an investor perspective.
If the US economy starts to struggle, right, we've seen the vibes really roll over, but in terms of getting that feeding through to the hard data, what's the relationship between that and the overall muni market and returns?
So it's not necessarily an immediate response. So as I mentioned, a lot of times munis are kind of seen as a staid market in terms of not as much volatility as you might see in equities or commodities or other types of markets. But there is a trickle down impact. So in the muni team, we cover state and local governments very closely. So the economy softens, then what happens is revenues for state and local governments will soften, and in turn, tax collections and everything that these state and local governments use to run their services could get weaker. And then that in turn is something that bondholders take a look at in terms of, what is the revenue? We had a economic rebound post-pandemic. The credit quality of state and local governments was very strong, but now there's questions. If the economy softens, what now?
So, Shruti, your town of Chicago in the news in the municipal bond market this recently. Chicago denies schools push for debt to pay pension bill. Talk to us about what's going on there.
Yeah, so I've been covering Chicago and the state of Illinois and the Midwest for a while now. And when you talk about the finances of the state of Illinois and the city of Chicago, it's difficult to separate that conversation from any discussion about pensions. And the reason for that is that the city of Chicago, the state of Illinois has a very large unfunded pension liability. Now, what's happening right now is that pension liability and the questions of who is going to pay for it is coming into the fore between the Chicago Public Schools and the city of Chicago. So the Chicago Public Schools has had a mayor-appointed board for more than a decade now, but it's in the process of moving towards a completely elected board. And there's a process of disentanglement that's going on between the city and the school district. Amid this process, there are questions about some of the shared finances that these two entities have. Chicago has been paying for a portion of the employee pension contributions for the Chicago Public Schools for many years, for 100 years, some people have said. The last few years, the school district has been contributing annually for a portion of the employees, non-teacher employees, that participate in this municipal fund that the city actually maintains. This year, what's happened is that there are deficits on both sides. Money is tight. And there's a question of who is going to pay a $175 million contribution towards this municipal employee pension fund. The city has already paid for it for 2024, thinking they were going to get a reimbursement from CPS, Chicago Public Schools. Chicago Public Schools says it hasn't gotten enough economic development leftover money called TIF money from the city to actually make that contribution. So there's a lot of complications, but the question is, how is this going to be resolved by the time that the city needs to close its books for 2024 by the end of March?
So if we just back out for a second, and that was an amazing explanation of an incredibly complicated issue when it comes to the muni market in Chicago. But you mentioned schools, et cetera. When we see the federal government pulling funding from some main universities, what can be the trickle down to the muni market on that?
So education is a big question mark right now for the muni market, whether you're taking a look at higher education, which is seeing potential pullbacks of federal funding, or the local level as well. There's questions at all levels in terms of what the federal government is going to send forth. At the higher education level, there are questions about policies. And at the local level, there is just a question about what kind of future the Department of Education has.
All right, Shruti, thank you so much. We appreciate that. Shruti Singh, municipal bond reporter for Bloomberg News. She's based in Chicago, talking about the municipal bond market here.